And welcome out to our show here on a Friday, 10/8/2021, last day of the week. And it's our halftime report where we're going to go through these markets one step at a time, breaking down all the charts, the news, the price action. Going to take a look at the sectors heading into the weekend as well. And we've got Coach Frank here to share some of his favorite charts with the team out there. And welcome back to our show. Got a full panel planned for you here today. Got Coach Matt running screens, doing analysis. Got Coach Mark here as well. And Frank, as always, on his Friday appearance, as I just mentioned, he's going to be bringing some charts. Let's start with Matt. How you doing today, sir?
Doing fantastic, Tim. Excited to be here with the crew to break down the market activity and look at the week that was and get ready for the Skyline report meeting later today to get prepared for the week that's coming up.
Absolutely. Looking forward to all of it as well. Frankie, how you doing today, sir? And you got some charts for us a little bit later in the show?
Yeah, doing fantastic. I will say that the harsh reality of earnings season hit me like a brick today. It is that time. Like big banks next week. It'll be a busy couple of earnings weeks. Maddie's favorite, my not so much. But other than my usual displeasure about earnings season, doing fantastic. Excited to be here, hanging out with the team as always.
I don't know if it's Matt's favorite.
I was going to say, I was going to say, simply because I got, roped into the job of reporting earnings for our community doesn't mean I love earnings season.
If you don't complain about it nonstop, you like it, as far as I'm concerned.
Well, based on that standard, then yes, I do love earnings season.
We appreciate you breaking those numbers down. And we are going to get busy with earnings season starting next week. There's a bunch of companies that are on the docket, a lot of bank names, Taiwan Semiconductor, Delta Airlines, and even Alcoa. Yes, starting off the earnings season. But that's not today. That will be more about next weekend when we start getting into it. But Mark, you first. How you doing today, sir?
I don't know what you're all worried about earnings season. I went long into FedEx before earnings. I went long into Nike before earnings. What are you worried about earnings? Huh?
They did okay, didn't they?
He's got a different philosophy, I'd say, on earnings than we do.
Yes,
I think that's well known.
Nothing can ever go wrong. What are you? I mean, come on, YOLO. Buy those long, out of the money call options.
YOLO it into these retail earnings that have been gapping down. I don't think so. Not for me, sir. Let's get right down to market analysis. By the way, if you're out there,
I would like to know the courage of his conviction on the naked put he did sell before earnings. Was it a 1 delta, 2 delta, 3 delta?
Dude, size doesn't matter.
Means nothing.
Commitment does.
Goodness. All right, let's get right down to market analysis here. By the way, if you're out there watching the show, hashtag Team Tackle in the chat. I'll be monitoring it today, as I always do. Looking forward to what you guys' thoughts are out there. And make sure you give me a thumbs up, a subscribe, and a bell button if you can. Get alerted every day we go live here on the show. Come and join us each and every day. Matt, let's start with the technical analysis. It's been an improvement in the market this week. There's no question about it. We've come up off of the lows, but we're not out of the woods here. We went through all the different indexes and sectors in pre-production. There's some improving chart conditions, others that are not. What did you read on the broad market?
Well, I think you got to be impressed with the bullish response or the lack of bearish momentum, I would say, in the market the last few days. And I do think you've seen a little bit of shifts in patterns that were dominant in the market coming into this week. As you can see, the up, down, up, down, up, down nature of the market, riding the lightning, that 9 EMA. You see a little bit of a nice hammer candle yesterday. The hammer candle on Wednesday, kissing back and breaking back above the 9 EMA on Thursday, and a doji candle to kind of end the week. So I do think you gotta appreciate the momentum shift here from a bullish perspective. And then when you look at this and from a more micro level, looking at the sectors, I do think you got to be a little bit impressed with the double bottom, double top that you're looking at in materials. And when you look at industrial, you see that same double bottom, double top type scenario or reversal type analysis off the 200-day moving average. And then when you look at finance, I think you got to be fairly impressed that you're kissing up against a resistance channel where you could see a breakout, right? But then you're saying, yeah, I'm fairly impressed, but I need to see a little bit more follow through. And then when you're couple that with next week, and you're talking about big bank earnings next week, that's going to be at the forefront of a lot of news cycles next week. So yeah, I am impressed with the market this week from a sense of where we were last week to where we are now this week. You had a lot of concern coming into this week The S&P 500 was kissing towards the lows. You started the week on a very negative light. It could have spun out of control. It didn't. I think that is a fairly impressive market response, where it can break the dam and it doesn't, where it can hold resistance and it doesn't. And so, yes, I am impressed by the bullishness of the market this week. But again, I do think we need to see a little bit more follow through, because again, when you look at the sectors, you're sitting up against reversal in materials. You're setting up a reversal in industrials. You're setting up a potential breakout in finance. You got a light discretionary in it, holding its pattern between 180 and 185, but you haven't seen any follow through there. And so I do think we need to see some follow through in the broad market. We need to see a little bit of follow through in some of these short-term reversal characteristics in industrials, in basic materials. I think we need to see a little bit more follow through on the breakout potential on finance, especially coupling that with earnings next week. And then when you look at the problem children, we'll come back to these sectors here in a second. But when you look at some of the problem children from over the course of the last, really kind of what this volatility in the market has been tied to, and you take a look at technology, again, you got to respect the fact that the bulls came through this week, and you got to like the last couple days of bullishness in the marketplace. It certainly broke those same degrees of patterns, and I wouldn't say trend, but the same degree of pattern that the S&P broke as well. But man, we've been here before, and not long ago. We were right here kissing against that 20-day moving average just 3 weeks ago. What occurred? Gap down over the weekend. We're sitting here right there in the problem areas of the market, technology and communication. Yeah, you broke up against the 9. That's a positive first step, but now you're just getting beat back down by the 20-day moving average. I think we need to see follow through here. So again, I'm impressed by by more than anything, the lack of bearishness this week, because I think that's really what kind of occurred earlier this week. But again, I do think we need to see a little bit of follow through, and couple that with some positive earnings reports next week.
Frankie, what about you? What are you seeing in the broad markets from a technical analysis perspective? Obviously, the price action, like Matt just detailed, some improvement here this week, but we need some follow through. What is your read here on the markets?
Yeah, I mean, not a whole lot different than Matt's. I mean, when you think about something like tech, you're basically waiting for that bear stop out development, right, Matty, where we need to see some downward movement. Let's see where the sellers really come in. Maybe it is that high from yesterday. I don't think we have enough information today to say that. Get another down day, we probably could, and look to break back above that. So still some work to do, but is improving. You're seeing, really nice things in the banks and energy, right? Some improvements in the other cyclical areas as well. A lot of things within tech are at or around support zones. So while maybe not where you'd want them to be as a trader, or at least my style of trading, an interesting battle lies ahead, I think, in the technology sector as a whole. I do think when you think about where the market is at the S&P 500 wise on, say, a weekly chart, still looking like it's trying to turn into a bullish retracement on that weekly on the S&P 500. So I think we're still in a mixed bag market, which is, probably to be expected. I don't think we were going to, get clarity in 1 week as much as maybe that would have been nice for us to do. But I do agree that I think the theme overall for me is improvement. It has improved. It has improved some of the charts. There are less clear, there's less bearish retracements this week. Like last week, there was lots of them. This week, there are things that, followed through on that bear retracement and are now into the breakdown territory. But there's a lot of things that kind of blew those bear retracements up, which is, of course, a positive sign for the bulls. So still a mixed market, in my opinion. I still think you're looking at, the strength in energy and financials personally. Got a lot of earnings to navigate, though, as much as you may or may not like that.
Yeah, and just to kind of go on what Frank was talking about, the improvement you're seeing here in technology, getting back up above the 9 and the consolidation between the 9 and the 20 there, that is certainly a positive step for a reversal. But again, you're still looking at a lower level of resistance, and you're still looking at a lower level of support in the trend. And so we have not seen a trend reversal yet. You've seen positive steps in that, but you haven't seen a trend reversal. I do think what Frank talks about in bear stop out day, and that's kind of a tackle trading thing, but everybody at tackle trading kind of knows what we're talking about, it's that moment in time where you see that bearish retracement here, where it just gets blown out of the water. And what we like to see is you like to see a little bit of either some consolidation here, forming a little bit of a high base, or some degree of flag-based pattern. And so when I'm looking at reversals, Frankie, you got your standard market reversals, right? That, take basic materials, for example, just as an example here, double bottom right there at $79, come down and kiss it again, double bottom at 79, come back to the double top at 82, confirm 82. Now you're looking at that line in the sand right there at 82 for a potential breakout. And that's kind of your standard double bottom reversal, right? It couples that with a little bit of slowing momentum. It's really, I don't want to say this example, here's textbook, but it kind of gives you an example of what traders look for when they're looking for standard market type reversals. One reversal technique that I feel is much stronger post-pandemic than it was pre-pandemic is that 1, 2, 3 reversal that we talk about. And the 1, 2, 3 reversal is basically what we're talking about here with bear stop out day, where, when you're looking at this from a technical perspective, again, I'm going to just quickly, give me 1 second. Let me erase that and let me come here. So basically what I'm talking about here in your standard 1, 2, 3 type pattern, guys, and I got to get my drawing tool to work.
I was going to say, where
yeah,
is
I
it?
got to get the drawing tool to work.
Epic pen, yeah.
So you have that standard W type formation, right? What you're looking for, and you basically try to get it above the breakout channel, and that's where you're really looking for your technical timing. And that's typically what we do see in a normal market, is some degree of double bottom, double top, or some degree of head and shoulders formation, where you see this type of formation, and it couples that with a little bit of slowing momentum, and then you're looking at that breaking of the shoulder, which would be right there. And so you're looking at that type of reversal pattern. Well, the marketplace, and those are still really, really common in the market as well. But one thing that I have seen in post-pandemic is a market that does this type of number, where you form that bearish retracement, and then it does that. And that's the 1, 2, 3 V-shape reversal. And that can be a very powerful reversal. And so when you're looking at it from that perspective, and you come back to what Frank is talking about in technology here, XLK, what Frankie's basically talking about, guys, and let me get my drawing tool again, is you have that standard bearish retracement here. And so what Frankie's talking about is that number, where basically you see some degree of consolidation, you see a flag-based pattern, which now would see that technically as an increasing support level, and then you're basically 1, 2, 3 bullish type trend analysis. And so that's what Frankie is talking about, and I just wanted to paint the visual.
So
Well,
yeah,
and
it's a good picture. It's
a lot of
picture.
times that chart development actually starts on the intraday as well, Matt. And the S&P 500 right now, as we are improving, we did get back above an intraday level of resistance. We're putting in a little bit of a higher pivot high. I know it's hesitating here today, but the daily chart's still weak. The weekly chart still has an opportunity in it. That whole bear stop out day may correspond with some of the earnings reports that do come out next week. So I can kind of map that out in my head from a price action perspective. Anything else you want to add on the S&P right here while we're on this chart, though?
No, again, it's been improving. You got to respect the improvement from the bullish side of the equation. But again, you're now coming into earnings, and you're fighting against some degree of resistance chop in most of the market. I think you're positive, but I still think you're dipping your toe in right now.
And I do want to flash through the sectors here in just a minute, but I want to get to a couple of news items if we can.
Well, very quickly before we do, to kind of go on that, right now we have a ranking in the S&P at 35. Okay, that represents a slightly bullish ranking in the marketplace. And you combine multiple time frames of analysis. You take into account pattern recognition, and you take into account short-term trends and intermediate trends when it comes to the rankings of tackle trading. Right now, you have an improving intraday condition. You have a weekly improving condition, but the daily charts are still choppy, and you're still looking at lower levels of resistance. Frankie, is there enough evidence on that daily, is there enough evidence on the pattern shifting, the intraday analysis building? Because listen, I was in the halftime report all week long talking about the importance of 4360 getting violated. We have seen that violate this week. We're seeing a little bit of a higher high, higher low scenario. Obviously, Doji Friday here, but you do have an improving intraday chart happening in the S&P. You come out to the weekly chart, you're still seeing this as a bullish retracement on the weekly chart, and so that still has a really good trend behind it. Does the intraday strength in the last 2 days, because it really has been the last, Wednesday, the close on Wednesday coming into Thursday.
Yeah.
So does that intraday strength on the backdrop of the weekly support strength, does it give you enough confidence to increase your personal ranking in the S&P 500?
No. I could understand the debate. I think if we take out this weekly high early in the week, I can change my opinion pretty quick. But I think as it is right now, I'm really going to be thinking about the follow through of that intraday and of that weekly chart, right? If we can take out this intraday high, if we can take out that's also, of course, the weekly high, that would do that for me. But I will need to see that personally before I'd be willing to get any more aggressive than I already am.
Yeah, I think that's kind of where my head's at too. I think you got to respect and you got to appreciate the bullishness over the last couple days, but until I see a trend reversal here, I think 35 is an appropriate ranking right now.
I
do as
think
well.
so too.
You could argue a 5-point upgrade with the intraday development.
I think you're
all that
going to
kind of
see
stuff,
5-point
but-
upgrades at the bottom of the sectors when
In
you're
some of the
talking about
sectors.
industrials, when you're talking about materials. I think some of those rankings that you had in the negative 45 to 50 rankings will see slight improvement given the fact that they're double bottoming right there at some fairly important support levels. But again, that's the subtlety you see in rankings based on improvement over time. I think you like it, but you haven't seen enough to actually say, okay, I'm going to adjust my delta in my portfolio based on the intraday movements over the last 2 days when the daily charts are still a little choppy.
Gotcha. Let's get Mark in here. We haven't heard from him much yet here. Mark, what is your read on broad market conditions right now heading into the week, improvement through the week like we've been talking about? What's your take?
And this market needs a spark, right? And the only thing I worry about is if this rally fails, like the last one did, just the wearing on sentiment. We need a good earnings season as bulls. You just do, and I think that could provide a genuine spark, because we ran into earnings, the last couple earnings, right? And then earnings came in great, but there was lots of excitement, lots of anticipation. You're not seeing that run up, right? You're seeing reactionary things to Evergrande, and then we're going to rally off that. Reactionary things to the debt ceiling. Those are like taking away bear things, and the market rallies on them. It needs a bullish theme, a spark, and earnings can absolutely provide it. Unlike previous earnings seasons where they came in great and was only how great and people were front running, I think there's genuine wonder on what earnings seasons are going to be. So if they come in good, there's your bullish spark to lift you to the next level. And so it's going to be not boring the next couple of weeks.
Well, and honestly, I think the raw numbers, and again, we'll be reading these every single day, but just based on my anticipation, I do believe we're going to have one of those top 5 earnings seasons. I think it's going to be a very special earnings season from a raw numbers perspective. But there's a key data point that a lot of traders, Wall Street, market participants are going to be tracking, and that's guidance. And guidance right now, given the backdrop of where guidance is, given kind of the concern that the Delta variant has brought in the third quarter, do we start to see improvement there from a guidance for 2022, especially given the fact that we now have more information from the Fed of what their plans are in 2022 as well. And so I'm looking forward to, I think the raw numbers, guys, are going to be impressive. I think you're going to rival the first and second quarter of this year, where you're seeing mid to high 80s to start the year, to start the earnings season from an EPS beat and a revenue beat perspective. There's nothing in the data that I've seen that does not suggest that. I think the market's anticipating that. Guidance is going to play the role here.
Yeah, and we've seen a little bit of that, by the way, even just in September with a couple of companies. Mark even mentioned them earlier that did report. FedEx. They didn't offer very good guidance. Stock gap down. Nike had some problems with as well. Bed Bath and Beyond had a very, very similar issue as well, and they gapped down. So I think if you do miss on guidance, Matt, lower guidance or whatever it is, you could be punished in
Well,
this earnings
I
season too.
I get it, and I respect every name you just said besides Bed Bath and Beyond.
Okay, fair enough. Fair enough.
But there is a slight difference between them and JP Morgan, Goldman Sachs, Apple, Microsoft, Tesla, Amazon,
Sure.
all the semiconductors, every stock in technology. Like there's a big difference in those.
Yeah. Yeah. But I do think they have to come in and they have to beat and they have to actually have really strong numbers, in my personal opinion. Earnings season might give us a theme. We're going to be watching that again next week. We got a bunch of names coming down the docket. A couple of news items. Mark, you did
Hey, real
mention
quick, Tim, before we move on, Jose just asked a really interesting question in the chat about earnings. Just wondering, I said, coaches, do you believe that the next few weeks of earnings are already factored into today's charts? And I was going to type one out, but it was
that's a wonderful question, and I think the expectation of the EPS and the guidance is slightly baked in. Yes, I do. I don't think the market's going to be driving that much on that. Now, I still have the philosophy going into this earnings that you got to beat and beat. Like that's the starting point for me. You have to beat and beat. And the beat is the raw numbers, the EPS and the revenue numbers. If you don't beat and beat, like I don't care. And I'm just talking personally here. I don't care what you say in guidance. Like if you don't beat and beat, you weren't accurate on your guidance last time. So you got to beat and beat. And in this environment where the last 2 quarters you came in at 86, 87% beats on EPS numbers and the revenue numbers were matching that, and that was for 2 consecutive quarters. I think the market is very, very aware of where we're at from an earnings perspective, and I think we're also catching up that those expectations are low, given the fact that where we were last year at this time to now where we are now. So I do think there is a little bit of the raw numbers could be baked in here. There's no doubt about that. I think guidance is so important here, guys. Seeing guidance come back and what some of those big dogs say about what they expect in 2022, I think those are going to be major market movers here. So yes, I do believe some of the overall expectation of a positive reporting season is baked in. You got to overcome that with positive guidance.
Yeah, I'd agree 100%. And I'm glad that
that's a great question, by the way.
Yeah, it was a really good question. I started to type. I was like, no way. There's not enough room, and so those are.
Is there a character count? Just throw it to Matt. He'll drill that character count.
Exactly. I owe Matt for some insolent fantasy football advice. It was a really good question.
Oh, we're doing that again.
Listen, until we're not, we are. Yes.
Okay.
I believe there is a character count in YouTube comments.
There
actually.
is. Yeah,
It's the same
absolutely.
as Twitter.
I think it's 200. I believe. I don't think
like
it's quite the same as Twitter.
I gotcha. All right,
Appreciate the question though.
Jose, wonderful question. Love that. And good catch on that one, Frankie. A couple of news items I did want to just kind of throw out there and update the team on, Matt. We did have a jobs report here today. We were kind of watching for that.
Oh, did we?
For that. Yes, we did. The Labor Department announced that job growth was weak in September. It was weak in August, but they revised the number up from August. So you kind of had a mixed bag there, Matt. We've seen that with labor market numbers for 3 or 4 months now, where they're always doing those backward revisions, right? And there was a lot of hot takes today on what the Fed was going to do with it, how they're going to interpret it, what it means, all that kind of stuff. I don't necessarily need to go down that line.
I think Wall Street hired my daughter to give her expectations on where the labor market numbers should come into, and that's what we're basing everything off of at this point.
Yeah.
I don't know. You tell me. August, it's been revised now 3 times. August jobs report.
Yeah, it has three different revisions. Okay. Yeah.
All right. Does anybody? And I'm just asking for Frank, Mark. Do you guys believe in the 4.8% labor market numbers right now?
I don't believe. I believe that our economic reports have been taken over by both
broken
parties.
Just broken right now.
I believe in our economic reports as much as I believe in China anymore. I think they're politically motivated. I think
they're broken.
Policy, so.
Yeah.
Well, not all of them.
They're just hard to trust, right?
It's not all of them, but the headline numbers.
Yes.
They do some things to the headline.
Yeah, I mean, if
numbers.
you dive into reports, you can find some good stuff. But
you can get accurate data. That's the thing. You can get accurate data, but some of the headline numbers, they're just crazy at this point. And whether it's politically motivated or whether it's just a very, very, very extremely difficult job in assessing the labor market right now post-pandemic, I think there's a little bit of mix of both. I do. But I do believe the only way to get an actual read on it is to actually dive into the individual components of every sector out there.
Well, and we didn't see a lot of strength in hardly any of the individual sectors, actually. You know, retail, those different names where we did have strong growth in June and July, Matt, that tapered in August and September here. And it doesn't really change the theme for me. Hiring was slower during those months as people were concerned about COVID, you know, Delta variant and travel and all that kind of stuff. Same reason why people revised some of their guidance lower during those 2 months. I don't know if it changed the needle for me at all. The market didn't move on the report, so we'll see if the Fed actually does
and the broken nature of the unemployment report specifically is the fact that it only tracks people that are no longer receiving unemployment benefits.
Yeah.
That is extremely difficult right now, given the fact that enhanced unemployment benefits have subsided or ceased. You're talking about how about the long-term individuals that are no longer employed, that are still trying to find a job? It's just an extremely difficult environment to be accurate from a macroeconomic data perspective.
Yeah, I'm with you. And then another issue that we've been watching is that debt ceiling issue. And McConnell did reach across the aisle, and it looks like the Senate did pass a resolution to increase $480 billion on the debt ceiling through December 3rd. Stopgap measure to get us through that October 18th
Think
deadline.
about that. We
Moving on
needed
to the House.
$480 billion for 2 months.
That's scary.
We needed $480 billion in debt for 2 months.
Just for a couple months.
Well done,
pay our
America.
bills. Don't get me started on that. That's going to get everybody a little bit anxious here heading into the weekend. I don't want to do it. So let's move on and let's.
Well, I do think that is a positive step from an economic perspective, you know, but again, we didn't fix the problem. And I do think that there's a little bit of a muted market response from that. We did just kick that can down the road.
It is literally a kick the can down the road. That is all.
December 3rd.
Yep.
Like, and so there's a lot of positive developments that could transpire between now and then. But again, until we actually see those positive developments last, I think the market's going to be a little hesitant here.
Yeah. And that's what we're getting here on a Friday heading into the weekend. Matt, one thing I did want to do here today, I know that you prepare for it each and every Friday, give a flash through some of the sectors. I know you already looked at some of the key ones that grabbed your attention early. Why don't we do that right now? And
let's take a quick peek at it. Let's take a quick peek. And let's always start in kind of how we categorize the sectors. For those of you who are new to Tackle, we categorize the 11 sectors in 3 categorizations. One is growth, one is cyclical, and one is defensive. The aggressive sectors, i.e. the growth sectors, are technology, communications, and consumer discretionary. When you're looking at those areas of the market right now, you have a 35 ranking on all of those areas of the market. Now, that's not due to they're all doing the identical things. It's just due to comms and technology doing identical things. And over time, discretionary has kind of solidified itself. And so when you're looking at tech, and let's start with tech and comms here today, because it really is the areas of the market that is kind of prone to these volatility shifts and currently. And so when you're looking at these areas of the market, I think you got a very similar read on tech and comms than you do the actual NASDAQ itself. When you're looking at the NASDAQ, you know, you got to like the fact that it broke back up above the 9. You got to like the double bottom there at about 14.4, but you're now kissing up against and Tim, I remember calling you yesterday and I had talked to Mark on, but I called Tim yesterday and Tim's asking me my opinion. I said, and it was literally right here, guys. It was right there at 15,000. So you're just gonna have to trust me on the timing here. But Tim says, what do you think of it? And I said, I like it the same way everybody else likes the news that is coming out right now. But don't you have to concern yourself with 15,000? It's a very, very significant whole number. And it's right south of that downward moving 20 period moving average. That just so happened to kind of be that resistance level. It held firm. You saw the downward movement in price. And so, yeah, I do like it. But as of right now, I see this more just as bearish retracement analysis at this point. You know, in the short term, you look at it lower low, lower high, lower low, lower high. And so until you do, and we talked about this earlier today, until you truly do see bear stop out day, and what I do feel that is happening right now over the last 24 hours is you're really starting to identify where that number is from bear stop out day in the NASDAQ. And so you look at you come back, and that would be 15,000. I don't know if I was clear on that, but that would be 15,000 bear stop out day is what I'm looking at. But when you're looking at that, you couple that with your analysis in communications and technology, a 15,000 break in the NASDAQ probably sees technology above the 20-day moving average. If you see that same scenario occur in comms, you're seeing a little bit of a more slowing momentum reversal in comms with the potential 82 break here as well. And so you're at one of those scenarios in comms and tech where bearish retracement analysis, comms look a little better than technology does. Some of that is due to Google. Google's looking, a heck of a lot better than Facebook, for example.
Mm-hmm.
So look at that potential reversal here. And so you do have scenarios where you could see some really decent buying if you do see the NASDAQ get back up above that 15,000 barrier, and then you also get above the 20-day moving average. Once again, you couple that in comms and tech, looking at that same degree. So until that occurs, I think the word is caution that comes to mind.
Agreed.
Here is caution, patience, wait, hold. There is an opportunity, but let's wait to couple that with a breakout here, a bear stop out day. Frank, when you're looking at these sectors, do you see anything different?
No, I mean, I'm spot on when we're talking about growth. I mean, you are seeing a little bit more of a mixed bag over in discretionary, right? When you look into that area, some things that are looking really nice. Breakout Canada, McDonald's hitting all-time highs, and then you have GM, Ford have been rock solid as of late, but Starbucks hanging on by a thread at a support level right now, and so it really is a little bit of a mixed bag. I think that probably ideally, just from a pure trader's point of view, we just get a development next week, a week of just pure little downward drift, higher lows get put in, work into some higher highs. So we have that pattern that you were talking about next Friday when we're talking about this area. This whole zone of the market, I think, is in that, broadly speaking, at least needs some development. Am I open to trading individual components within any of those areas? Absolutely. I don't think the NASDAQ is so scary I wouldn't touch tech no matter what. I just wouldn't touch it as a whole. I would just take my spots, right?
Mm-hmm.
Yeah, so when you're looking at comms and technology itself, a little bit of hesitation, like the price action, but we got to see a trend reversal here. And right now, you're just seeing a bearish reversal, but you do have paths for that bear stop out day, and you couple that with what's happening in the NASDAQ. When you are talking about discretionary, once again, 35 ranking, kissing up against a resistance channel. Frankie, you talked about a couple names there. You talked about MGM. And guys, you're going to be seeing this a lot, right? These things are coming pretty quick down the road here, but you're looking at MGM here. Nice little cup and handle type ascending triangle pattern. Just broke up above a weekly resistance level. You got to like MGM holding firm near the top end of the charts there. But what about Tesla, Frankie? Yeah, again, I know earnings is tight here on Tesla. There's no trade. I'm talking more from a sector perspective. Tesla above 1800, not 1800. Tesla above 800, going to provide a little bit of bump to the sector itself. So that's something to keep an eye on as well from an overall sector perspective. But take a look at booking very quickly. BKNG here. Again, you're going to see this on a lot of charts. But booking here, nice little resistance channel right there at 2,500. Certainly could see some love from a sector perspective if we do break out of that channel there at that 2,500 level as well in discretionary. So I think in discretionary, with tech and comms, I'm hesitant, Frankie.
Yeah.
Just because of the patterns in the market and they have been tied to some negative themes in the last 3 to 4 weeks. But in discretionary, I think if you see a trade, you take a trade.
Agreed. 100%. 100% agree with that.
Well, and the number one difference in that philosophy is you're looking at a sector in comms, it's still finding bear retracement analysis. You're looking at a sector in tech, still finding bearish retracement analysis. When you're looking at discretionary, it simply is held up a heck of a lot better than those other two growth areas of the market.
Mm-hmm. And that improvement is pushing it towards a breakout as well, which would obviously give it a lot of clarity. So, okay, gotcha. Those are some of the growth areas. What about the cyclical areas, Matt? The financials, the energy, the industrial.
Yeah, let's take a look. Let's take a look at the cyclical areas, and it really does start with energy for me. Energy is our highest rated sector at tackle trading right now at the 25. it looks like it's upgrade time, guys. And this does separate energy from some of the other sectors, but hasn't energy separated itself from the other sectors lately?
That's correct.
The momentum is strong. The fundamental backdrop is strong. And yeah, I don't think a lot of people are going to be enjoying oil at $100 a barrel. But when you look at that crude oil chart right now, man, the volatility has been increasing, but it's been increasing to the bullish side.
Mhm.
That's
so-
just a transitory chart. What are you talking about?
Is that what it is? Is that
Just
is
transitory
that a
price?
transitory?
It's just transitory.
Uh-huh. How long you been holding that joke?
My whole life.
It was worth it. It was worth it. That was very funny to me, actually. But it is a transitory chart, and it will be at $100 as well, and $110 as well.
Yep.
You got to like the momentum here in crude, and you're looking at a continuation trigger above $80. And again, look at the pattern, guys. The pattern's very simple to understand. You ride that 9 EMA. You ride that 9 EMA. And you don't question the 9 EMA because the 9 EMA is the algorithms, and the algorithms currently control crude. And so when you're looking at that, I see a nice continuation trigger above 80. You look at what's happening in the energy space. It's obviously bucked the recent volatility in the broad market. The question I have for Frankie is this. I do think we're looking at an upgrade here. I think you got to respect the momentum. But as a technician, I'm always going to look left to the chart. I'm always going to look left to the chart. And as somebody who micro-analyzes every little detail of things, I have a hard time not looking at these handles right here as energy now fights up against that. And so I love the momentum, and I love energy bucking the trend. But when I look at this on a weekly chart, I see a major area of resistance that we're now fighting up against. And so I'm a little hesitant to be too aggressive on the upgrade. I got this as a 5-point upgrade, put it into the 20.
I think a 5 point
Frankie,
is fair.
your,
What about
your
you, Frank?
audio's out, Frankie.
Oh, my back.
Yeah, you're
Yep,
back.
You are.
Oh, there we go. I think when you're looking at XLE, the big development is that 200 weekly, right? Just technically,
The same type of zone I was concerned about, right?
exactly.
But
So
you're
we-
actually getting above it.
we
Yeah.
need we need to make sure we close that, right, and follow that
Yeah.
through, because once we get through this, because this is a battle, and I think you're right, Maddie. I don't think it would be a bad thing for energy to take a little bit of a
Mhm.
cool off period, right? In this zone, and then break out, 2 weeks from now. But we wouldn't mind it breaking out next week either, because there is, when you look at left of the chart on the weekly, I mean, we've got room to go, right? And we've seen so many energy stocks that have been, I guess, ahead of XLE that failed their first test of the 200 weekly, a few months back, broke out of it and have really, really cooked. So I think it really is going to come down to an individual's preference on how they feel about the, quote unquote, overextended breakout, right? Do they
Mhm.
need some development? I think that's fair if that's what you're asking for.
Mhm.
I think that will lead me to the same conclusion that led you, Maddie, to a 5-point upgrade, because the technicals are there, but they're not exactly what you'd want them to be, right? And
Yeah,
so,
oh my goodness. If you gave a week of consolidation and then you break out of this level, oh man, I love that. I love that. I'm just not the dude that loves overextended breakouts. I never have been, I never will be, but you got to respect the momentum and the strength. And obviously, I think if you see a good trade in energy, I think you've been pulling the trigger, and you've been pulling the trigger for 3
sure.
consecutive weeks here.
Correct.
And I don't think that's changing anytime soon. Crude's still strong, energy's still strong, and I don't think we should be too scared about a little bit of a resistance level when, like you correctly identified, Frank, on that weekly chart, aren't you more concerned about the 200-day moving average, and you're breaking back up above that one as well? So I do think all of those are positive data points, Frankie and Mark, Tim. When you're looking at this space, obviously we were talking about a little bit of Schlumberger last week. I still like it here, but again, here's the problem, right? You start getting into a little bit of earnings from those short-term traders' perspective. Kinder Morgan, you got to love the analysis here, right? You got to love that breakout. Long-term investors going to be a little bit celebrating here on Kinder, but you got an earnings on the 19th. That's really tight against the corner. When you're looking at MPC, man, who doesn't love that breakout occurring on MPC, right? You got to love that. You got earnings on, what is that, second, first?
11.
You got time.
Mhm.
You got time on MPC. my point is there's a lot of potential plays in this sector. Some report in the next week and a half. Others don't report till November. Make sure when you're going through your watch list, make sure you're tracking that earnings, because earnings can throw a big wrench in the analysis.
For sure.
Mhm.
There's
Well,
nothing worse than waking up when you missed an earnings to disaster. It only has to happen once, and it never happens again. But it is
only
not a
has to
fun
happen
way to
once.
wake up. Don't do it. I can recommend that.
Well,
It's not fun.
and again, unlike finance, because finance, like we as market participants, we just lump all finance next week, right? And then
Pretty
you
much.
start getting some trickle in other
The week
industries,
after.
but for the most part, we got like in the S&P next week, we got like 20 S&P companies in finance reporting next week. So like we lump a lot of that together. Energy, there is a lump too, but it's kind of in 3 weeks from now.
Yep.
You just have a few of them reporting over the next week and a half. Just make sure to check that when and again, I'm talking more of the short-term tradings. You see a trade, you take a trade, right? Just check that earnings. The rule of thumb of tackle, 10 trading days. Aggressive traders, they can certainly fit timeframes in between that 10-day window. But if you're more of the standardized swing trader, you're really that 10-day rule is for that standardized swing trader. Mark, I know you more aggressive sometimes. You'll front run in that last 2 weeks coming into earnings. I know most traders will front run a little bit coming into earnings, but again, those will be 2-3 day trades where you're really just combining
momentum.
you're combining intraday day trading with a little bit of aggressive swing trading. Again, standard swing trade rule for us to tackle for the scouting reports. We don't put anything on the scouting reports that has earnings within a 10-day trading window.
Yeah, gotcha. So energy, nice little move here recently, probably a slight upgrade, a lot of earnings at the end of the month and 1st of November. So we still got some time there. What about some of the other cyclicals here, Matt? Because you mentioned financials. We're heading into that next week, but that chart is looking really, really nice too.
That is a beauty of a chart.
On which one?
On finance.
Oh,
Yeah.
yeah.
Like finance.
You got to like finance, and finance right there at 30 ranking. I listen, this is an upgrade for me in the financial space. To me, we haven't technically broke out, but you got to love the momentum going into the breakout. But again, it's a 5-point upgrade, a little bit of a 25 ranking going into earnings. I fully expect earnings to be positive in terms of and again, positive in terms of the raw numbers. I'm not talking about market response yet. I just think we got to be extremely hesitant in front of earnings next week in the financial space.
Yeah. What do you think about XLF as specifically the way to play financials next week, Maddie? That's kind of where my head has been, because there's a lot of things I really like in finance.
Well, let's go through a couple of them, Frankie, because there is a lot of things I like in finance as well from a technical perspective. And I'll just kind of give you some of the charts I wrote down initially. PNC here, looking at a multiple time frame type scenario where you're looking at a potential breakout. Where's earnings? Next week.
Mm-hmm.
When you're looking at COF, right? Nice little, little bit of a cup and handle there, a little bit of a high base scenario, but a breakout of 175 on the 25th. So that's tight there. You could maybe fit that window in. When you're looking at the CME group, by the way, I'm seeing a little bit in the exchanges here. They're showing a little firing off response. Look at this little head and shoulders
did you see
formation.
ICE this week?
Oh man, I got NASDAQ, ICE, and CME written down, bro. But do you have? And this is the question. I like this setup here.
Very
I like
much
this
so.
reversal setup
that's
here.
That textbook.
Right.
That's almost a textbook bear stop out in my head.
100%. Well, and you couple that with head and shoulders type formation. Yep. You couple that with the 200-day moving average right there. Can you fit that trade within that tight window up until the 27th? I think you can. But it would be more of an aggressive trade, but I think you can. When you're looking at NASDAQ, NDAQ, I'm seeing a little bit of a break of 200 here, Frankie. We all love the $200 breaks like we love the $100 break. Look at that weekly chart there, Frankie.
Very nicely
Look at that weekly chart. You got to love that daily chart coming in, the momentum build. You like the overall weekly chart. Easy trigger above 200. Just an easy trigger. Can you fit that in within the tight window of on the 20th? I don't think you can.
It's going to be tight.
Well, it's a matter of...
You just don't have time for anything, right?
Exactly.
If it's momentum, great. But if there's any
one more
consolidation,
for you. FitB. right? Gotta love the high
Love
base
FitB.
scenario. Love FitB earnings on the 20th again, or on the 19th. So the question once again is, are there individual plays to be had? Yes, there are.
For sure.
Even with earnings next week, yes, there are, because some of the exchanges don't report next week. Some of the, credit card companies don't report next week. So it's a lot of the banks that report next week. Big money center banks, the brokerage firms. It's those banks, those Wall Street institutions, and those are the big dogs of this space. And so, can XLF, if you love the breakout potential in XLF, is that a better way to play this opportunity on the breakout than, say, one of those individual components? Because all of those individual components, whether it was a reversal or a high base, was a breakout, Frank.
Yep.
Yeah.
They all were. There wasn't a retracement in the bunch. It was all breakouts. So the question is XLF a better way to approach finance over the next week and a half on this breakout, and maybe play the breakout of 39.24? There isn't really a target up there. You're really looking at maybe 40.41 type thing from a sector perspective. But is that a better way to play the sector during earnings season? I don't know. It's certainly a viable path. There's no doubt about that.
I think it is a much more viable path. If you look at the periods of like July, April, January, it's not like we see this crazy volatility outside of normal volatility with XLF. It might pick up a little bit in the ATR and all that kind of stuff, but I think you can map out a trade and play it even through the earnings season. Personally, I do.
It certainly is a viable path for traders that want to take advantage of the potential breakout in finance without dealing with the individual volatility of an earnings season.
Very good.
Yeah.
All right, industrials, material.
But again, kind of for just to summarize this conversation, what I'm hearing from Frankie is he has a little bit of the same hesitation I have regarding, being too aggressive on this breakout, though. Because
yes and no. Yeah, I mean, I look at this on the weekly chart, and I think for me the hesitation is with the names that I have available, like TD. Jose brought up TD. I had him. You probably had him too in your scanning, man. There's some really, really good looking charts that I don't have to be overly concerned about running out of time earnings wise.
Yeah.
So I think for me, the chart is perfectly legit. I'd have no problem with that. Follow through off of yesterday's high and let's rock and roll. But they still have to compete with the rest of the names that are still in my tradable universe, right? That don't have those earnings right ahead of me. So I always find these really interesting ways to think about playing sectors through earnings, because, well, if it's a great earnings season in finance, XLF benefits. If it's a terrible one on Goldman Sachs, it's not necessarily dead in the water, right? And so I think it's a viable way, but it does get put up against all of the names that you theoretically could trade. And that's kind of where my head is. Those things are going to offer me realistically more upside, better risk to reward than XLF probably, right?
I agree with that. You're always going to have more individual return potential on a individual component than you will the sector itself. You go to the sector to minimize the volatility.
Correct.
Is what you do. And so until we get through next week, traders that do trade finance will probably rather trade the actual sector itself than the individual components. But again, that's just during earnings season for me.
Agreed.
Yeah. All right. When you're looking at some of the other sectors within the cyclical areas of the market, and that's really kind of industrials and basic materials. And I'm seeing these very similar here, Frankie. Double bottom, double top type analysis in industrials, double bottom, double top analysis in basic materials. So I think we need a little bit more work to do in the reversal analysis here. And when you look at the individual components, what I will say is they look better than they did last week.
Yep.
But last week they looked like garbage. And this week they look like,
They look like someone else's garbage, right? Someone else's garbage is always more
at least it's not
yours.
my garbage.
So you're encouraged from a bottom-up perspective? Okay.
I am
as well.
And I'm specifically talking in basic materials about the chemical companies. When you're looking at the chemical companies, and here's DuPont, that's a reversal analysis and stabilization at the bottom of the chart. When you're looking at LYB, specialty chemicals have been a little bit of an issue and have been very volatile recently. Well, here's LYB starting to solidify itself in reversal analysis. when you take a look at some of the bigger holdings in specialty chemicals. Here's Lynn Holdings fighting up against the $300 reverse, $300 trigger. Kind of difficult. When you're looking at Sherwin-Williams, same degree of things. So you have some weird things happening in specialty chemicals where some of the really ugly charts are starting to look a little better, and some of the major holdings are actually looking like they're going to come down. And so you have some mixed data going on in this space. One thing to keep your eye on, though, is the bottoming of these charts. Again, the top end of the materials space right now is showing a little bit of volatility. The bottom end of materials, when you're looking at, say, your gold miner stocks, and that's GDX here. You got to appreciate the firing off response in GDX here. You got to appreciate that. Everybody knows how much I like 30. It tested me, though. I won't lie. It did test me. But again, why it tested, but it didn't break. Why? I just had a fundamental view of the 200-day moving average there on the weekly chart. I like that backstop there. But when you're looking at this, you gotta like that type of movement you're seeing here. You need more of it. Give me more, right? Give me stabilization. Give me something. But you're seeing a little bit of buying mentality at the bottom end of some of these charts, both in, like I gave you an example of DuPont. You saw one on, even in specialty chemicals, you're seeing a little bit of a different perspective on LYB that's coming from the bottom end of the charts versus something like Sherwin-Williams or Lynn Holdings that was some of the strength of the areas of the market. And so, and then when you couple that and you look at a little bit of FCX here, one of our darlings that tackle trading, you're seeing a little bit of reversal analysis come in after $30 bounce and an increase in support and a 1, 2, 3 pattern coming into that 200-day moving average. Yeah, obviously got earnings coming around the corner. But what I'm seeing in materials, Frankie, and I'm seeing this in industrials as well, they're both kind of trading very similar to one another, is the picture is getting better. The picture is getting better. But the picture is getting better at the bottom end of the charts. I think we might have some value hunting in front of us, guys, post earnings.
Yeah, I could easily see that. Yeah, because I 100% agree.
Both sides, industrial and basic materials. I think we have some value hunting coming in front of us.
I'm interested. All right, very good. So through your scanning, you guys are seeing something.
Well, and again, it's the weakness I'm seeing at the top end of the sector versus the stabilization I'm seeing at the bottom end of the sector. I just really like the combination of that analysis when you're talking about finding value. And finding value is and it just for anybody that's not familiar with tackling our terminology, finding values, we're looking longer term. We're looking at combining fundamental analysis with reversal technical analysis. And I think you will have some opportunities in industrials. I think there will be opportunities in basic materials. I think those opportunities will solidify themselves over the next 2 to 3 weeks as we do navigate these reversals and as we navigate earnings season.
Very good. All right,
I think I peaked. I think I got Mark's interest peaked on the value hunting opportunity in basic materials. He started leaning up a little closer.
He did.
Lean in.
I haven't been paying attention at all to this conversation, but all of a sudden he got his interest peaked there.
I can repeat every word for word. You said.
I doubt that.
You said buy Lucid Motors and Cinemark.
Is that what you said?
That's what
I believe that's what I said.
So about the defensive.
Very quickly in industrial, just very quickly, just something to keep an eye on. We talked about a little bit last week. One of the areas that you probably should track a little bit more is the aerospace and defense companies. They are showing some stabilization, reversal analysis. You know, Boeing is not obviously. We talked about a darling of tackle trading, FCX. Boeing is not a darling of tackle trading in any capacity.
No,
the amount of things we have said negative about this company is actually. It might be the number one company. It might have approached Goldman Sachs territory for me, actually.
Given the totality of 20 years, I don't think so. Goldman was up
it's
for a
easily surpassed
long time.
Goldman for me. I don't. There's not even a question. There's no one I like less than Boeing.
No.
We loved Boeing until they did what they did. So I don't know. That would be an interesting discussion. Who have we trashed on more? You know.
No, it's Boeing over the last 2.5 years.
For sure,
it's Boeing. They've tried to catch up to Goldman. It's been so much. But my point is, you are still seeing reversal characteristics
You
here
are.
in Boeing, and you're seeing a tight opportunity against that 200-day moving average. When you're looking at Lockheed Martin, you're seeing V-shaped reversal characteristics where you now see that as an increasing support level, and all you got to do is find bear stop out day, which was easily above the 50-day moving average at this point. When you're looking at the knock list, look at the knock list. Look at the knock list. Look at the knock list. Look what happens when you see bear stop out day. There it is, right there. Bear stop out day. Boom, boom, boom. Algorithms take control. And so, yeah, that's some of the opportunity I'm talking about. And obviously, knock has just kind of taken off and did something in and of itself. But I'm seeing this, and I've been seeing this for the last couple of weeks. You are seeing a little bit of consistency and stabilization in aerospace and defense. Knox just ran too far for everybody in front of earnings coming up, but the point does remain that you are starting to see some strength here, and so it's going to be interesting. Like I said, in the industrial space, I know it's out of favor right now, but guys, real massive opportunity does not present itself when everything is in favor. You're basically spreading the wealth of America around to everybody that's jumping on board to the same thing. It's when everybody's like, oh man, this is a dog, this is a dog, this is a dog. Well, it might be. Things change. I do see some changing characteristics in industrials and basic materials, but I do think we're a little bit early in terms of the actual, hey, listen, it's go time.
But that's where bottom analysis starts, though. It starts a little early, right? And so a little bit early here, but
of course it does. It starts when it's going down.
Yeah. So, but I like what you guys are pointing out here.
And
from some of the charts.
then we have the last areas of the market, and those are the traditional defensive areas. That would be real estate, utilities, healthcare, and consumer staples. And I'm going to do this one quickly because, Frank, I did a little scanning today, a little bit. I haven't done all my scanning yet, but I did do a little scanning.
Let me guess, you didn't find a lot of things you couldn't wait to go put in a buy order on the defensive sector.
In real estate, and I scanned every sector because I was just going to bring like one or two stocks to talk about today per sector.
Sure.
Right? I got nothing in real estate. I got nothing in utilities. I have nothing in healthcare.
Staples.
And I have nothing in staples.
I got a couple. I got one in staples and one in
like
real estate.
nothing. Like
I
it's
have
just that.
nothing.
I think I have one in each. The real estate one is the one I did for the Tackle Twitter yesterday is a breakout on Simon Property Group.
SPG.
They're SPG, yeah. They're not there yet, right?
They're not there yet.
That's a lot.
I saw SPG. They weren't there.
And that's a great breakout, but wake me up when you actually break out, right? And that was the best of the bunch. I did think that chart was fascinating with it being below the 200 weekly and the 50 monthly. I thought that was a really fascinating chart.
Yeah, but I agree. And by the way, I loved Frank's charts from yesterday. Just loved it. Let me see if I can find it very quickly. Is that in the Tackle Short?
Yes, that'll be in that thread.
Oh man, if you guys haven't seen the beauty, how do I get this to go big?
What you're asking the wrong people,
dude. I don't understand how technology works.
Charts Thursday edition.
There we go.
I wanted to take a quick minute, take a look
What's
at
up?
symbol SPG, Simon Property, coming to you with a
Can you hear that?
interesting chart.
I
think
I hear it twice.
Yeah,
we're getting it
symbol
twice.
SPG.
So it must-
Listen, nobody needs to hear that much.
Listen, yeah, you don't need to hear all that stuff. Oh, I just wanted to just showcase. Look at that beauty. I wish you could see the music. Oh, just beautiful. So Frankie, I loved your pick, and I definitely agree with your analysis. But
look at the weekly,
like when I'm looking
Real
at
quick,
this,
we are getting the audio from whatever other videos
good.
playing as well.
So what? It's Frank.
I agree.
The beautiful backdrop,
It's just
right?
more Frank. We're good.
There is.
I'll get that beat. I'll get that beat behind my words. That's fine.
I love the music.
I love the beat, right? It's the
Yeah, I
me
do
that
too.
you could probably do without, right?
I agree.
Jam
So-
those tunes.
But to finish my thought here on real estate, I see that, but I kind of feel like we're early on that.
Oh yeah,
We would need to see a breakout here,
100%.
and that breakout could take some time,
Almost certainly
that-
will.
and that time will go right in front of earnings.
I could easily see these guys
And
breaking
so
out like 4 days.
that's why I
before
didn't
earnings.
write them down though.
Yeah,
I saw
that
it,
means,
right?
yeah.
But it's just like, oh,
Well, I
nothing
got a
there.
very simple question then for you, Matt, because a lot of those defensive areas were way down in neutrality. Do you see any improvement, maybe subtle upgrades?
No, no, and I'm talking, what I see is
Yeah.
nothing is from a individual stock
Mhm.
perspective, right?
Mhm.
I'm seeing choppy nastiness here on the real estate, a little up, a little bit of down. I don't see any consistency in price action here, though. When you
Mhm.
look at it from an intraday perspective, look at the up, look at the violation. So you got momentum build, and then it just kind of goes
Turns
buried.
over.
Like that's a very difficult short-term technical read. When
Mhm.
you take a look at consumer staples, you got a little bit of the same double bottom, double top analysis that you have in basic materials and industrials, but it's a very choppy double bottom, double top. You don't have a lot of consistency here, and as a technician, consistency and analysis is extremely important to me. When you look at healthcare here, once again, just choppy. Got a little bit of a double bottom, double top. Could healthcare work itself out into an opportunity?
Mhm.
Yeah, but it's got some work to do. He's got to go pick up a shovel and dig a hole and fill it back in a couple times before it actually gets to the point of, saying, "Hey, we're ready to rock and roll here." So I do think it's got a little bit of time. And then when you take a look at utilities, let's go to utilities because I did save the garbage for the very last. Like somebody get an accurate technical read on utilities right now. It's just a ridiculous place to even look at.
I got
Yeah.
you, man.
Was
I
that
got
too
you.
harsh on utilities?
Listen, I mean, it had a
No,
nice
too
candle on
harsh.
Wednesday. I don't know. We could look at that one
As
green candle and
I
say,
just want to take a moment to apologize to any utility company that I may have offended with my harsh comments. I should be much more.
I think
I
you're
should be
okay.
much more patient with your volatility.
I think you're just fine. By the way, that's sector roundup real quick. And every weekend we do a full roundup and analysis on all these different components and sectors in our tackle trading newsletter. We'll have more on that. Post that every Saturday, actually, by the way. I appreciate your thoughts on all those things, guys. Couple quick looks at commodities. I got one stock story, and then we got Frank's charts a little bit later in the show. Matt, you already took a look at crude oil. It's blasting out. We've kind of analyzed it. Anything else you want to add to that one?
Nope, looking for AD to work itself into a nice little resistance trigger.
Gold is in a consolidation on the intraday.
Gold's got a weird candle today, though.
It sure does, man. It reacted to the jobs data early and then it gave
Weird
it all
candle.
back. Yeah.
Well, you tell me, because Tim
Well,
asked. Go ahead, Mark.
Oh no, it's the algo yield program because like job report came out and it was slightly and the yields dipped slightly and gold spiked on that and then they restabilized. And so,
I want to. Okay. You see this box right here? Let's go ahead and I'm going to get my Epic pen for this one.
Okay.
You see this box right here? This box right there.
Yeah.
See that box right there?
Mhm.
Okay. How many people were trading that box, that up and downward movement? I'm talking people.
Not a lot of humans.
Not a lot of humans.
That's jobs reaction, economic data reaction. Yeah.
You see that zero? That's not an O. That's a zero. Zero people were trading that. Zero. That is 100% algorithm response to the jobs data report coming out, and then the cash open gave it all back up. That's all algorithm stuff. You see the people? Here's the people. Here's the people. I was going to do a church and a steeple thing there, but you get the point. That's all algorithms. That's not real price movement there. That's algorithm price movement there. So when you look at that, like just a weird candle there. Difficult read. I think gold's a stay away from me. GDX, I'm still on that GDX train at 30, but GDX at 30 is fine as long as gold stabilizes above like 1680.
Yeah. Yeah. And that one's going to take some time. Yeah.
Yeah.
That was going to take some time. All right. Last one here, Bitcoin, if we can. And obviously this one had wonderful price development throughout the week here, Frank. I've been talking to Matt and Mark about it all week, but I haven't had your take on it yet. What's your read on Bitcoin here, Frankie?
You love to see when things follow through,
Mhm.
right? When
Mhm.
last we spoke in the halftime report, we had held support, broke into that trend. And I think everybody liked it. I think everybody read it as a positive sign. And it's really nice to see the actual follow through. You love seeing that on your charts, right? Of course, we're a little extended to the upside now, but I think you're pretty much in that point where if you're interested in Bitcoin, you're looking for your setups on Bitcoin. Again, as we work into that 60K resistance level, be it an intraday consolidation, a pullback to the 90 MA on the daily chart, whatever your systems and trading style is, I think you're very open to setting things up and working towards that 60K. It's hard to just blindly say, I want to do it right now, because the risk reward could be a little difficult. But right now, I think you are looking at this. If we do see a pullback, for me, it would be a look to buy the dip situation for sure.
Mm-hmm. In one
Pull
story,
back to 50K, Doji at 50, upward moon price. If we can get a traditional bullish retracement,
or even just like a shallow flag into the 9. Well, I guess it wouldn't be that shallow now, but a flag into the 9 or something like that.
By the time it happens, that 9's caught up, right?
Yeah.
I Frankie, for the last week, my daughter's pilfering through my desk drawers here. But for the last week, I've had Bitcoin as a good day trading. Like, it's still a great day trade. You got that intraday build going into it. I didn't analyze it on Wednesday when we were kind of breaking out, but now I'm seeing this more as that. And I think this is a positive development for a little bit longer term trader, maybe that aggressive swing trader. The day to the aggressive swing trader is kind of dominant there. But now that you've had a couple days of consolidation here, I think you're starting to see a little bit of pattern develop that, given more time in this pattern, you could see a really good swing trading environment coming up fairly soon. That's what gets me excited, because once the day traders do a great job, no doubt. We as swing traders, I love day traders, because day traders build into the swing trade. Everybody wins, everybody's happy. But you gotta wait for that pattern to develop as a swing trader. And up until the last 2 days, this was simply too much momentum, and it was too fast for the swing traders, quite frankly, because no pattern developed on any daily time frame. You only had patterns develop on intraday time frames. For example, and what I mean by that is when you come down to the 30-minute chart here, you got a nice high base breakout right there. You get a flag-based pattern there, coupled with a breakout there. You get a breakout there, breakout there. You have intraday patterns that really do stand out from a day trading environment. So when I say this is a good day trading type environment, it's based on intraday analysis, right? The intraday analysis, and I've said this many, many times in the halftime report, before those swing traders can come in with confidence, the day traders have to have confidence. They have to have consistency. There has to be consistency in intraday analysis for the swing trader to have the comfort level they need. Well, that is starting to occur here. As 54,000 is hit, as we're seeing a little bit of double top, double bottom on the intraday analysis, you look at the daily chart, that's forming the high base. And so what you're doing right now is Bitcoin being overextended is forming a high base, or it's forming some degree of flag-based pattern. We don't know. What we do know is we need another 2 to 3 days of consolidation or downward movement in price to solidify that next swing trading pattern.
Yeah, I love the analysis too, because you're right, 100%. We're up here at the top. We've had beautiful chart development. It's fired off crazy in the last week.
Well, and if you just want an indicator to help you understand everything I just said without understanding what I just said, RSI is above 70.
Relative Strength Index. I like it. All right, very good, guys. That's it from a market Skyline perspective. I only had one stock story. It's not even that big a deal. Tesla's moving to Texas. All right. Anybody have a big hot take on that?
I do not have any take, nor is that a stock story, nor is that a halftime report story.
Let's move into the last segment of the day then, and that is Coach Frank's charts. And, Frankie, I think it's easy to say that this is one of the most popular segments we do each and every week here on the show. The team loves it. I'm not going to delay it at all. You find some of your favorite setups heading into the weekend. You share them with us here on the halftime show. What do you got for us today?
Yeah, I'm excited about it. It is that time of the trading quarter that you are going to have less to work with all these earnings coming up right now. So, I mean, it's always just good to mentally prepare yourself that. And maybe I'm just saying that to myself, but maybe there's somebody else out there.
Say it again. I need to hear it again.
You're not going to find as many things as you would like. Well, you are going to find them, and you're going to realize, oh, they have earnings next Monday. That's not going to give me the time that I need. But you'll always find something that is going to work. And listen, I'm going to find that one diamond in the defensive area, and I'm going to throw this to you, Matt, right out of the gates, and that is General Mills, GIS. As a whole, I agree. There's not a lot of things that are, screaming buy, buy, buy to me in any of the defensive areas, really. But I really am very interested in this development on Goldman or in General Mills. We had that big pop on earnings, right? I remember you guys talking about it in the halftime report the day that it happened. I was lurking in the chat. We take out all of that resistance, have snapped back into the 9 without really any clear overhead until that 64 marker. I hate to say it, but I'm looking at GIS as basically a momentum play off of the 9, going and above today's high, below this little floor that we put in over the course of this week on the intraday, and look to try to work into that 64. Not the sexiest swing trade name of all time, but I think you have to like the momentum that we've seen this. I think on these guys, I think you have to like the space that we have to work into that 64 handle. I think we can make risk to reward work. So I'm going to throw this one to you first, Matty. I'm going to give you I'm going to let you throw some cold water on GIS here.
Maybe. This is how, just a little bit of inside baseball for Team Tackle here. This is how our scouting report works, or our scouting report meeting works. All of the coaches do their individual scanning before we get into the scouting report meeting. And then one by one, coaches will throw out potential picks that we will discuss and debate. If a pick is just good, it like hardly anybody says anything, and it's just like, move it on, right? We're a bunch of old crotchety guys at this point, just move it on. It's great, move it on. If the pick is garbage, we will tell the coach how bad of a job they did for like 5 consecutive minutes. Like everybody takes a turn shaming each other. It's fantastic.
It's fun.
It's fantastic. But if the pick is like lukewarm and we want to compare it against some other analysis, it will go something like this. All right, let's move it on to the next round. We'll compare it against some of the other ones. Most likely it'll get cut, but let's check it out here against some of its like counterparts. That's kind of where I'm seeing this one, Frankie. It's kind of in that zone where I see it, right? I see it, but then I'm like, I'm analyzing General Mills as a swing trade here.
Yeah.
Right. So I just want
do some crazy things during earnings season, bro.
And then I'm like, but it's earnings season and we gotta So I totally get it. Here's what I like. I like the momentum build here. I definitely like that. I like the resistance chop between like 61.75 and 62. I like that breakout potential there. Kissed off the 9 EMA. You got to like that as well. This is a momentum off the 9. Even in some of the downward movements in price that were very volatile last week, what held? The 9 did. Let's come into a little higher here, a little closer here. Look at that. Look at that. Look at that. I think the evidence is compelling there. So, I definitely see it, Frankie, but would it make a report? I don't know. We're not going to have a lot of beautiful charts to select from.
Sure.
Right. So if this was like 3 weeks ago.
Yeah, I think that's probably fair.
I would veto. Okay. But it's not 3 weeks ago. We're staring at a week of earnings next week, and you got about 80 companies reporting that will have an impact on other areas too. So I'm a little hesitant. I see it. Certainly agree with the analysis behind it. I would just like to see it against some of the other potential trades.
Yeah, I think that's always fair, right? Because you can't trade them all. You can't trade them all.
You know
go ahead, Mark.
I like Lucky Charms. I like Wheaties.
I know you do.
I like checks. In fact, I particularly like wheat checks with a little bit of sugar. I love Totino's Pizza, all General Mills. And then I would say that in the scouting report, and then I would say I veto. I'm like, what in the hell are you trying to do, swing? Go look at the last 2 years. Try to find momentum plays similar to this on General Mills that will work. It doesn't. It's not. It's hard.
And then you know what I would say? I'd say, all right, that's cool. I'll bring it up next week. And then if it doesn't work out, they don't remember, right? I'm like an elephant. I never forget. I never forget.
I didn't say we were in the scouting report meeting, you two. Yes, that is how the scouting report meeting goes. But again, the thing I love about it is we're all taking it from a different perspective.
Yeah.
And we have very open conversations on this. and I think at the end of the day, we all agree on two simple realities here. General Mills is not historically a swing trading stock.
Agreed.
Correct.
Right? But I also think we can agree that in moments where you don't have a tremendous amount of swing trading stocks, if General Mills is acting like a swing trading stock, I think we can still swing trade it.
You can consider.
That's kind of my philosophy.
Yeah.
You know, whatever's happening today is what's going to happen most likely tomorrow, right? That's kind of the general approach I take to trading, for better or worse. So if something's behaving with momentum, I assume that until that's not the case, that is the case, right? And so I did expect that this was not going to be one for everybody. I do look forward to talking about this with Tyler, though. But we can move on. That's enough time for General Mills. Probably
you will see who wins this argument between Mark and Frank in the scouting reports if General Mills makes it.
Oh, I'm going to lose. I have no doubt about it.
Mark vetoed.
That's all right. That's all right. All right. Let's move on to something maybe a little bit more exciting, I suppose. And that is going to be, where are you? OPCH. Option Care Health.
I don't know this company. Hold on.
So these guys are kind of interesting to me for, you know, one big reason, I guess two really. This pullback has been into the 9 weekly, which is where we are kind of, you know, fighting along with that daily 50-day moving average. So we have kind of that 1-2 punch of the 50 daily SMA and the 9 weekly SMA. They've been in a great trend. I don't think anyone can dispute the route that they have been on. I'm sure all of us wish we would have went back in time and bought some OPCH. So I really like where we're at there. These guys, when you look at them from a, you know, longer term point of view, as far as what's ahead of them that scares you in resistance, I mean, they've been at all these prices before, but there is just nothing that I look at until we get into 37 that says that's tough. That's a tough fight to win, which means we have a good window, not necessarily that's the target.
You mean 20?
Did I? Yeah.
You said 37. I was like, whoa.
So no, I do. I maintain the 35. Yeah, the 35.
35. Gotcha.
At the weekly chart. So the 35, there is stuff there. Right?
Are you looking more at longer term here then?
Well, I'm just using that to kind of paint the backdrop of the window that I have to work with. Because this would be still more of a swing, maybe swing into slight position, but definitely more of a swing trade than anything else. What I always like to do is kind of find the windows and things that kind of that scare me off. Because when I look at this trend and I'm thinking, well, where does it, you know, run into trouble? I mean, it could be anywhere, right? I don't know the answer to that. But when I look at the history on the price, there's just nothing that scares me. There's prices everywhere, but nothing scares me until that 35 range, which just means I have room to work.
I agree to a certain extent. I think 35 is like, if momentum explodes. And
well, yes, I'm not saying that's my target. Right. I'm saying that I have room to work. Right.
Yeah. I what I'm suggesting though is you got a lot of chop between 25 and 26. A lot of chop here. And so I think how I would personally structure this trade is a 26 break to a 28 target, a 30 secondary target, because I don't think 35 is viable between this and earnings.
That's right.
Oh, I agree. I don't think that's your target by any means. I 100%, at least not in a swing trade. I mean, I hope that that's the case, but
you hinted at it there. Does it need to clear 26 for you, Matt, for a trade as well?
Yeah, I think you want to clear this.
It does.
This 26. I think you're looking at either yesterday's high or the high of the week, which is at 25.64 area as what you need to see kind of at the minimum. Right. And then where an individual would go into it. But I do feel there's room to work back up because into the 28 is going to be more of the swing trading target. 100% agree with that. But with this trend, is it unreasonable for me to assume that this trend is going to continue? Because I would argue
on the weekly chart. No, I don't think it's unreasonable.
Exactly. Right. So I'm not saying my target's 38.
But I also
but if we take that out, I think there's room to the upside, not to the 38 upside on a swing trade, but maybe into 30 as a secondary, or more aggressive type of a target.
Gotcha. Interesting weekly pullback, deeper pullback.
It's really, I really like the way that it's developed over the last couple of weeks. I like that we're kind of seeing that scoop, that smiling 9 develop. I wish our intraday tops would have been a little more lined up with one another, right? That would have been, nice. But in a volatile market, that's also asking a lot, at least as far as I'm concerned. So I'm just looking at these guys continue this momentum. Let's see if we can work up into that 28. That is the first challenge, right? We do have to worry about that one in the shorter term, but I feel like there probably is some room for a swing trade with these guys. Anything, Tim, you'd like to add there?
No, I mean, for me, you mentioned 2560, 2570, some of those intraday levels. I'm with Matt. I actually think you got to clear 26 from the week before personally.
So you like
I-
taking out last week?
I like getting that clarity, taking out last week's high, because to me, the pattern's on the weekly chart, right? And that's
Sure.
kind of where I would look for a trigger myself. But I like the general pattern on the weekly chart there, and that's where it lines up for me. So
Yeah, I think that makes sense. I think that makes sense. I think you got to get a little upward momentum, right? I
Mhm.
think you squabble a little bit over exactly what that means to you individually, but I would agree you got to see some movement on that side. Let's talk a couple bears. Let's talk a couple bears here, and then we'll end up on a bull or two. I got two I wanted to talk about, and I'm going to throw this one to Timmy the Bear first, and that's Coles, Tim, KSS.
Interesting. I'll tell you, I actually only have 6 bear candidates so far. I've not done all of my scanning. Coles was on there, Frank. So I'm already on board with the potential opportunity here. There's a couple things that grab me, but what grabs you from the chart? Why did this one make your list today?
Well, a couple of reasons. One, I mean, we had this big gap down right into that old support level, right at 4650 ish. And then we kind of bounced off of it and then immediately threw in the towel. So there was not much excitement about buying at support, right? Understandably so. I don't know anybody who would be buying it there, but I don't know everybody. Now we've kind of worked back down and have established this nice 3-day floor that is presenting a pretty nice opportunity from an entry point of view. It's going to give us a nice, clean little low base cup and handle or inverted cup and handle that we could look to build an entry on. It's also given that 90 MA a little bit of time to work down towards us to start applying a little bit of pressure. So I like the entry. The entry I thought was very easy to build a trade around personally. Then I like the weekly. We've given up the support. This is a follow through candle on the weekly chart. We broke down. We stuck our nose last week right below support and then came up off of it on the intraday. This is a follow through candle, in my opinion, on the weekly chart of that recent breakdown. Also puts us below that 50-day moving average. And it also lines up with all of that old floor that they've got in that 46 range going back into 2019. It was a major breakdown back in 19 when we took out that support level. Will it be that big of a breakdown this time? Well, I can only hope if I trade it bearish that is the case, but it certainly doesn't need to be to make it a viable bearish candidate. So I like where we're at on the weekly. I like the development we've seen on the daily. I think it's a very easy trade. Risk reward will be there, right? They're going to have options, whether it's using the top of this 3 candle box for a stop, the 9 for a stop, the pivot from, I guess late last week as a stop. So we have stop options. I just think it really lines up for a very clean bearish trade. So that's kind of my stance on Coles here.
Yeah, I like it a lot. I mean, low base potential here. Matt's identified several levels that go back historically to tie into what we're looking at right now. That gap down on the 30th was a double downgrade out of Goldman and JP Morgan, citing supply chain issues, retail issues. And you don't have earnings till middle of November. So there's a lot here that I like.
Beautiful. From
hanging by a thread, right?
like that, and retail stocks are out of favor right now because of the whole supply chain issue. Until you get a catalyst from some companies saying, "Hey, supply chain's getting better," that technical setup, that's a nice chart.
Yeah, we're slobbering a little bit. Anything we should hesitate on here? What else you see in the chart?
Yeah, it's a bear trade when the market's kissing against resistance. But other than that, we can discuss that later. There's always bearish opportunity. Number one, I like the pattern coming into it. Like the pattern, you're looking at a little bit of a low base consolidation, real tight trigger at 46. You got to like that from an intraday perspective. You see that come in on the volatility, ding, 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 ding. You're getting punched. You're getting punched. Tyson's got something in the corner over here, guys. It's getting punched, punch, 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 punch. Eventually, it's going to break. So it breaks. 46. Where does it go? I do think 43, 44 is a zone that you got to concern yourself with. I don't think it's one of those areas that you can just say, nope, it's going to blast through that. That is major, major, major support, major support, major support, major support. So I do think 43 is a legitimate target here. But even at 43, you only need 1-to-1 at 43, and you easily got 1-to-1 from a reward to risk ratio of 43. I think it gets extremely interesting down to 40 as it breaks 43, and then under 40, it could be free fall time. And so I think you got some ranges to work with in the 40s from 43 first target, 40 secondary target. Underneath that, it's ugly.
Gotcha. One for the bear list there, Frankie. All right, what
The
you got
bear.
next?
I'm going to let you rapid fire 2 more bears, and I'm going to let
Probably.
you choose.
The bear list will look better than the bull list this week. By the way.
Probably.
I think so. Yeah.
The patterns
Matt,
are better.
I'm going to
Patterns are better.
I'm going to make all of you quickly choose, right, between Clorox, CLX, and FOUR, FOUR. Both breakdowns, both very similar technically from a breakdown point of view. In the intermediate term, Clorox has certainly been struggling longer on as a whole.
Very similar short-term patterns, though.
Very similar short-term patterns. I'm gonna let you go
Can I
first,
go
Randy.
first?
Which one you like best?
Again, I got these fairly similar. I know they're coming from different areas on the chart, right? Short-term downtrend, a lot of volatility here on FOUR. On Clorox, more of a more prolonged downtrend, but again, same type of chop, upward, downward nature, and both clean at support. So I would say, do you like the potential reversal analysis in continuation on FOUR, or do you just want to punch Clorox yet again for the 15th consecutive
while
month?
it's down.
Like that's kind of where my head's at, Frankie. And again, I like them both, but since I have to pick here, I'm gonna go with FOUR here. I like the number at 75. You could probably front run in front of 75 if I did any detailed analysis on it, but I do like 75 here. It dings there, ding, 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 ding there, ding, 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 ding over here. So I do like that 75 break. And if it breaks 75, there is literally nothing to 70. Underneath 70, there's nothing to 65. Underneath 65, there's nothing to 55. And underneath 55, it doesn't even get ugly. It's still ugly at 47. So I like the downward potential here. Whereas on Clorox CLX here, again, very similar pattern here, very similar, just a little bit more prolonged bearishness in Clorox. But when you're looking at Clorox, a violation of 160, yeah, I mean, you could work yourself down to 150 over the next 3 weeks. I'll take FOUR. I like the volatility, I like the pattern, I like the potential on FOUR a little bit better.
I thought you would
like the
say
trigger.
that. I thought you'd say that. What about you, Tim?
I like the trigger on FOUR better too. Like Matt just pointed out, that 75 trigger on that weekly chart is significant. It couples up with the daily and the intraday.
It stands out a little
So
bit.
it stands
does.
out to me. So I like FOUR out of the two.
Mark?
Mhm.
Oh, 4, it was easy. Yeah.
I figured, yeah, Mark was the easiest one. Mark was, and I'm going to agree. We're gonna all be on the same page on this one. I think they're both very clean, but I do agree. If I were choosing one or the other, I feel like the upside, well, the downside, I guess, right, of FOUR really stands out.
You could get me to sell a naked put on Clorox. You could not get me to sell a naked put on 4.
Fair enough. Fair enough. All right.
Gotcha.
Okay. I know we're up against
last
the
on
clock, so
bulls.
just 2 more quick bulls, and then we'll call it good for the day. Listen, I'm going to do it. It won't be able to make the reports because we're just a little too tied up on earnings. But I mean, we got to look at IBM, don't we?
Do we have to? I
How
know
do you not? be
Matt's brought it up to
appreciative
me 3 times
of
this
Big
week.
Blue?
I don't.
Well,
do-
listen,
Yeah,
you
Big
should-
Blue.
Number
dude.
1 safety company in the world. Big Blue, IBM.
Convince me. All right, somebody convince me.
Hold on. I
Choose
want to
one
be
of
very
IBM.
clear on something. With anybody that will ever watch this program on YouTube, I was joking.
Dude, it's its own sector now because it doesn't fit anywhere else.
It's just IBM. It's Big Blue. It's Big Blue. You got to appreciate that movement. I don't know that there's a trade here, even without the earnings. I do think you like the increase, momentum that you're seeing on it. But Big Blue tied on earnings, probably just more of an interesting chart than a chart that you're running off to prep a trade on, right? But I do think it's interesting. And listen, it's Big Blue. When it's doing something interesting, don't we almost have to take a
For
minute?
this market to recover, Big Blue has to go down.
fair.
I'm
fair
kidding.
enough.
Again, I'm
Fair-
in the mood, guys. I'm
Fair
sorry.
enough. Yeah, I could see where you're going with that. All right.
There's some truth to what I just said.
There is. I know that you mean it a little bit. All right. Last one. BNS, Bank of Nova Scotia. One More Financial. One of our, Coach Greg's.
Oh man. Oh
neck
yeah,
of the woods.
I like this. Are we going Canadian Bank Week on
Yeah,
Canadian
I think so.
Thanksgiving holiday?
I think so. That looks great. TD's been, Toronto Dominion's been really cooking. A little
I
tougher
think it's
to
Canadian
trade.
Bank Week.
But
I think it is.
when I look at some of these Canadian banks that don't have their earnings, and then you look at that pattern on BNS. You're breaking the downward trend line. You're getting the bear stop out day. You're clearing all the moving averages. You're in a sector that at least I like, for whatever that is worth to people.
Mhm.
Should be a really easy trade to prep. We got time till earnings. 65 is really nothing until we get into that level. I'd honestly, time permitting, target it back up to resistance personally, but that's just me. I'm assuming no one has any beef with BNS here.
No, good reversal characteristics, reclaiming the 50-day moving average with some a little bit of momentum, I'd say. And again, we're doing Canadian Bank Week after Canadian Thanksgiving, so it's fantastic.
I like that as well. Nice reversal characteristics break off those 200. So yeah, I like it as well. I'll put it on the list. Very good.
Awesome.
All
And I'm sure
right.
we'll have a few more in the reports this week, but always a pleasure hanging out, talking charts with you fine gentlemen and the team. So thanks for having me as always.
Thank you, Coach Frank. You're the best, brother.
We'll have a list of bulls and bears on the option report and the stock report heading over the weekend. We you hammered out all those lists during our scouting report meeting. Had some students request, hey, can I attend the scouting report meeting? Can I attend the scouting report meeting? I get it. We got to have those moments for our internal coaching team to have discussions freely, get you guys ready for the weekend, all that kind of stuff.
Can
They
I
are
answer
fun.
that?
Yeah.
I've done that a couple times, bringing in some students to the scouting report meeting. But one thing that I require from the coaches at Tackle Trade during that meeting is to be as open, transparent, and honest with each other as possible. In terms of how we approach our analysis. And sometimes we have disagreements, and sometimes those, and sometimes we see things a little bit differently. And what I have found is when I invite students on, the coaches have a tendency to put their educational hat on. And sometimes they put the filter on, and I don't want the filter. I want raw, I want truth, I want honest, I want directness. I want those things. I try to create an environment for those things. And so whenever I've invited students on, it honestly, it feels like all of a sudden I just feel like I'm teaching Master Trader back in the day.
No.
So-
What are you saying? He doesn't want us on our best behavior.
No, I
it's
don't.
It's a little wild west in those meetings.
I do want a
for
little
sure.
shoot 'em up type philosophy. Yes.
Sure, I do too. I enjoy it.
Yeah, I agree. And those meetings are very fruitful for a reason. They're wonderful. They help us get ready for the weekend, to help you guys get ready for the next week. So we're going to be moving into those actually for the next several hours here to wrap up our weekend. Back on the markets here for final thoughts, just a couple of calls to action. Over the weekend, by the way, if you do want to get those option report, stock report, newsletters, I'm going to drop a 15-day trial link to our pro membership in the YouTube chat. So anybody can join that if you've not done it yet. Matt, final thoughts for the team out there as we got earnings next week and we're wrapping up a week of content here and shows on the halftime report.
I don't know. I'm thinking about inviting a couple students on the halftime report meeting. On scout report meeting.
SRP meeting.
Because I actually really enjoyed it when they were there.
It is fun. Yeah.
I really did. Like it was cool. But and no, I was just thinking out loud there. You know how I get down. Guys, it's been an absolute pleasure to hang out with Team Tackle this week, navigating the markets together in the halftime report. Hope you enjoyed all the tackle shorts that are being put out there. If you haven't, make sure to check out Frank's charts on Twitter and, Jedi options and focus on, are we going fundamental focus or focus on fundamentals? I can't remember. I think it's fundamental focus. And I did my first Matt's whiteboard for the Step System Mastermind Group, and I did that on Wednesday, put it over there in the Tackle Trading Discord channel. And so if you have not had a chance to review my Fibonacci extension and retracement analysis as tied to Elliott Wave Theory, definitely go check out that video. And again, it's for any pro member in our Discord channel. And so Discord is becoming a thing for us guys, and if you're a pro member of Tackle Trading, you will have access to our Discord channel. So we're going to get that link sent to all the pro members sometime here, maybe I'd say Sunday or Monday. We'll get that link sent to all the pro members. But I'll be posting a lot of Matt's whiteboard stuff for the mastermind groups over there in Discord. And we'll be doing some other things over there in Discord as well. So looking forward to that. But hopefully you guys did enjoy my first edition of Matt's whiteboard that was put over there this week.
Yeah, I'll tell you, Discord is an exciting thing. We'll have more information about that coming down the pipeline. Now, the Trading Lab students have been really rocking it over there for a couple months. We're building in the STEP mastermind groups over there, man. I know you guys had some good conversations going on, and we'll keep promoting that because I'm loving what's happening over there in Discord. Marky, any last thoughts there? Anything I missed in terms of programming, things you want to make sure the team's aware of?
No, just have a good weekend, right? I mean, markets have not been boring. Listen, I've been working a lot harder than I've wanted to in the last month with markets. I would rather casual and be easy, like we have those stretches. Recharge, have a good weekend, relax.
Absolutely. Enjoy the weekend, guys. Until then, Frankie, great job today. Matt, appreciate your analysis as always. Great job, Mark. We'll see the team here on Monday, same time, same station, right here on our YouTube channel. And one last thing, if you didn't get a chance to do it, click that subscribe button. Make sure you're alerted whenever we do go live. Have a wonderful weekend, everybody.